This is Business Breakdowns. Business Breakdowns is a series of conversations with investors and operators diving deep into a single business. For each business, we explore its history, its business model, its competitive advantages, and what makes it tick. We believe every business has lessons and secrets that investors and operators can learn from, and we are here to bring them to you. To find more episodes of Breakdowns, check out joincolossus.com.
All opinions expressed by hosts and podcast guests are solely their own opinions. Hosts, podcast guests, their employers, or affiliates may maintain positions in the securities discussed in this podcast. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.
Welcome back to Business Breakdowns. Today we are diving into InterDigital. Now, InterDigital is one of those really interesting businesses that sits completely under the radar for most investors. If you're unfamiliar with the name, join the club. That was me prior to this episode. But InterDigital has the foundational technology, the foundational patented technology, which makes mobile phone communication and device-to-device communication possible. Everything revolving around 2G, 3G, 4G, 5G, the Internet of Things, all of these devices in the world that are communicating with one another is underpinned by InterDigital's technology. My guest is Jenny Wallace, co-founder of Summit Street Capital Management and portfolio manager of the U.S. Equity Value Fund. We get into the history of InterDigital. This business has been around for 5 decades and always focused on this area of technology. We talk about their patent portfolio. They have 30,000 patents and what that means. And one of the most interesting dynamics about this business is that they have to keep that strong balance sheet because when you have patents and when you have licenses, oftentimes you need to enforce those patents. So there's some interesting dynamics here that actually remind me a bit of our episode on Align. 2 completely different businesses, but something similar underpinning them in terms of the litigious nature that you need to have when you work around patents. Now, please enjoy this episode on InterDigital. All right, Jenny, I am excited to have you here, excited to cover InterDigital, maybe not the sexiest or most exciting name from the outside, but maybe try to bring it to life a little bit. And it's a company with 5 decades of history, and it's still small in many ways, but the history is there. And that really stood out to me. I thought maybe we could just start very high level off the top, describing what InterDigital actually does.
It is one of the most important companies that you have never heard of. InterDigital develops the underpinning technology by which all wireless communication using our phones and other devices is possible. Since the company's founding, the engineers at InterDigital have led the development of a wide range of innovations that are used in digital cellular and wireless, starting with the original 2G cell phone in the mid to late 90s, 3G, 4G, 5G, and today, even looking forward to 6G. Also, your consumer electronics that speak to one another, whether it's your connected dishwasher or your smart TV, the Internet of Things, and even automobiles. InterDigital's technology has actually been licensed to more than 7 billion devices over the last decade, and the company is one of the largest pure research and development and licensing companies in the world.
I don't know what the world population is today, but 7 billion devices, you basically got 100% of the population of the world. Understanding there's some numbers to finagle around there. Today, our cell phones obviously have a lot of different things going on beyond the communications. It sounds like what InterDigital is doing is very much revolving around communication between devices. Is that technology working with satellites? Can you break that down a little bit just in terms of what's actually going on with their technology?
What makes InterDigital sort of hard to understand, slightly unsexy, as you point out, is that its patents help with connectivity, because at the end of the day, cellular connectivity is simply the utilization of electromagnetic spectrum. So governments own essentially the spectrum and auction off different bandwidths of spectrum to wireless carriers. kind of like oceanfront property in Florida. Some of it's nicer than others. So different spectrums may be more efficient or better for different use cases. And there's a finite amount of it. So with a finite amount of differentiated quality spectrum, and of course, an ever increasing set of technological demands for using this spectrum, it's really important to have standards and efficiency at the forefront of how voice and data and video is transmitted over the spectrum. So, for example, in 2009, the United States made a transition from analog, the UFH signals, to digital TV. This freed up the 700 megahertz spectrum, which is considered very valuable because it's low frequency and as a result allows better transmission of cell signals, particularly in less populated areas. At the end of the day, what InterDigital engineers develop is a digital pattern of zeros and ones that efficiently transmits data in this electromagnetic spectrum in a standardized way so that your phone can communicate to the wireless towers. You may have AT&T and you are in a location where there is a Verizon cell tower. Because of the standardized nature of data transmission, your phone can connect to the wireless tower of a different carrier and communicate again, then off to another phone that may have a totally different carrier. So what is it that makes a technology get chosen as part of a standard? Well, what it really is the efficiency, the effectiveness of the division or the utilization of the spectrum. And then once in the standard, it is simply a pattern of zeros and ones.
If we can go back in time, 5 decades, this business has been around. If it was named InterDigital then, what foresight they had into the future in terms of the communications that would happen. Bring us back in time in terms of what this company looked like maybe at the beginning and whether there were key players and the milestones that they hit, because the market that they were operating in then looks a lot different than what they're operating in now.
So InterDigital was actually incorporated in 1972 under the name International Mobile Machines, which is also a forward-looking name. So as you mentioned, it's a small company. It has only about 400 employees. It has a $3 billion market capitalization, but it plays this, as I mentioned, indispensable role in the smartphone market, which is a $500 billion market by most estimates. The other players in this space are people you might think of household names like Qualcomm, Ericsson, Nokia. But these companies, interestingly, all have market caps somewhere between 6 and 60 times that of InterDigital. The founder of InterDigital is a man by the name of Sherwin Seligson. And he was really a true visionary. He actually dropped out of high school and made a fortune in the stock market in the 60s while he was still in his 20s. He was a guy that remained passionate about stocks, but he also liked being at the Jersey Shore with his family. What he wanted was access to live information about news and stock quotes and to be able to communicate with his broker without ever leaving the beach. This really inspired Seligson to develop a portable data machine, and that was the origin concept, if you will, of InterDigital. Obviously, his vision took many years to come to fruition, but in 1976, during the United States bicentennial celebrations, the company actually demonstrated the first wireless telephone ever and chose to demonstrate it in Franklin Park in Philadelphia, which is the same exact place that Alexander Graham Bell made his first demonstration of the wired phone 100 years prior. So there is a deep history of innovative communication at InterDigital. But interestingly, obviously a terrific and great accomplishment, it still took this company a while to find its footing. They had developed digital cell technology, but there was, at the time, no market for it. In the mid-'80s, this company pivoted to what is known today as fixed wireless or wireless local loop. And they built product that they sold to the phone companies, basically to provide telephone services to rural areas. They called it the ultraphone, and communication was basically possible through a system of radios. They were called cluster boxes, and they had antenna, and they transmitted telephone signals to a taller antenna miles away that then transmitted the signal into what you would think of at the time as the wired telephone system. What this allowed was voice communication to and from rural areas without incurring what had been the holdup, which is this sort of prohibitive cost of laying the proverbial last mile of copper that had previously been required. The company's motto became dial tone, anytime, anywhere. And while obviously it seems like a given today in a world of ubiquitous cell phones, this was actually a revolutionary innovation at the time.
If there's a way that you can bring to life the capabilities that they had that were allowing them to continue to sell into this market, it seems like a theme here that for decades and decades, they've been providing technology to this market. What were some of the ways in terms of real world application or stories that you can share in terms of how that was happening?
A great story that highlights InterDigital's unique capabilities as an early developer of secure digital wireless harkens back to 1990, when an Avianca airline flight from Bogota to New York encountered bad weather and tragically ran out of fuel. The plane actually ended up crashing in a remote location of Long Island, which had no telephone service. As the first responders arrived, they realized that this plane had been loaded with diamonds and drugs that they found scattered over a wide radius of the crash site, that while remote enough not to have phone service, was also less than 50 miles from the huge population center of Manhattan. Under ordinary circumstances, first responders would have communicated using radios, but radio communication wasn't secure. And they absolutely did not want the public to know about the diamonds and the drugs. So a secure means of communication for this remote location was needed. And there were other companies out there building analog, but analog could certainly be hacked with a scanner, as we have seen over history. InterDigital was already well known to several government organizations as the only company developing digital communication. The National Communication System called InterDigital to see if they could help, and the company was able to get a secure communication system up and running almost immediately because it had basically already been building these mobile base stations, and for the prior 8 years had been providing secure communication systems to the White House so that they could link one end of the Reagan Ranch to the other while the president was out horseback riding.
I love these really unique use cases that are coming out of this. Some of the better stories that we've heard. And I feel like I need to look up some history on that diamond drug crash. It's clear that there's something differentiated in the technology, but at the same time, it was eventually being adopted by the largest players in the space. And you've referenced where Nokia, it sounds like they were a competitor. I imagine they could have been a customer as well. Did the evolution of the business really take off once mobile phones rose to dominance in this 21st century era? Was there a big shift then?
There was a big shift and actually a big turning point in InterDigital's business model. So InterDigital was then, and frankly still is, small, but its intellectual presence has been quite significant in the communications industry. So much so that you talked about Nokia. In the late 90s, Nokia was the world leader in cell phone communications. They had 40+% market share, but they reached out to InterDigital to help develop technology for TDD, which is time division duplexing, which is a way of splitting bandwidth, but to develop the TDD standard of 3G communication and to figure out a way to make the leap from 2G to 3G commercially viable. This was a really important turning point for InterDigital, and it went at that moment from being a creator of these proprietary technologies, a mobile base station or something that they sell to the phone company, to a developer of what's called today standards-based technology. So what that means is instead of developing and selling products themselves, the company was developing and patenting processes by which all wireless products would communicate. And the basic importance of standardized technology is back to this idea of interoperability.
I think we've seen many examples, whether in credit cases like the FICO score or even the 80-20 rule with underwriting, mortgages. You can name industries, standardization of the logistics box and how that started to work with intermodal, how much it unlocks an industry and is a complete game changer. You referenced that can lead to commoditization if so many different people are using it. Here, it seems like patents are very key in the process. In the center of this all, it seems like the main asset is your engineering and technological capabilities, and right next to it is the patenting of those capabilities. Is that a fair representation?
Yes. InterDigital has around 400 employees. Half of them are engineers, and nearly all of them have advanced degrees. What's interesting about these standard processes is that there's actually a committee of engineers that comes together to decide what technology will be in the standard. Several people may develop a method by which some type of communication can occur. The engineers on the standard committee come together and they debate, promote, argue, and decide what are the best processes, the best patents to bring into the process. And what's interesting is InterDigital, of their 200 engineers, has leadership positions on 100 different important standards committees. Technology has always been and continues to be the DNA of this company, always looking at what's next. But to have that kind of a presence, not just on the committee, but to be in a leadership position is really important. First, it's a good indicator that the InterDigital engineers are among the best of the best. Being given a leadership position certainly means that your engineers have the respect of their peers, but it also puts InterDigital in a position to advocate for its technology. Most of the other licensing and patent developing companies are also manufacturers of devices and product one way or another. InterDigital is a pure research company, so that gives it this interesting, non-biased image and ability to be perceived not as a competitor by anybody.
Independently, without that same conflict of interest. When they are thinking about the various technologies that get incorporated into a new standard or various patents, I think you referenced in that previous question, is it ultimately just coming down to efficiency and size requirements for certain technologies to be mixed together? I'm sure there's interoperability between the different technologies and how that's going to work. Is there anything else that goes into that decision making? When I was first looking at this, assumed one patent, one technology for this use case, never really thinking that you're ultimately combining a bunch of these together.
Well, you are, but the other interesting thing is the evergreen nature of the patent portfolio. You might have a 5G phone, but you can call someone with a 2G phone and speak. All of the patents and the communication mechanisms in the most sophisticated phones have to have the ability to work reverse to less sophisticated phones. And that's really interesting because what that does for InterDigital is it creates almost an evergreen patent library, but that doesn't mean they're not looking forward. Over the last 6 years, its patent portfolio has grown by 60%. Today, this company holds 30,000 patents across wireless video, DTV. InterDigital normally issues or receives new patents every day. And 90% of its patents are basically developed in-house.
I was wondering about that 30,000 number. I saw it and it seemed impressive, but I stepped back and didn't really have context for what it meant. I think they grew from 19,000 to 30,000. You mentioned the percentage growth, which is an eye-catching number. But if you told me there's 4 or 5 patents that actually drive 90% of revenues, that would be one thing. And then the patent portfolio is maybe just more vanity. Can you mention anything just about those 30,000? Are a large percentage of them being used? How do you view it just as an investor? Is that a number that you want to see consistently growing? Does it carry much meaning besides what you mentioned before? They're getting new patents every day. There's clearly a lot of engineering work going on.
If they were to miss out in certain standards, you would start to wonder. It's not just do they have the patents, are they getting new patents, but are they the best patents? Are they the ones that will be used? That is absolutely what's critical. There's a cost every single year to sustaining an old patent. From InterDigital's standpoint, those 30,000 patents are not free. Once you get a patent, you still need to pay to maintain that patent. As an investor, we're interested in how does all of this innovation lead to profits? Since the 90s, as I said, their business model has been to develop these technologies on which it then secures a patent, and then they license to device manufacturers who pay InterDigital to use the technology. So its customers include Samsung, who's been a customer since 1995, Apple, Xiaomi, Lenovo, LG, Panasonic, Sony, and even Amazon in consumer electronics, some of the auto companies like Toyota. And what's interesting from a business standpoint is that about 90% of its license agreements are on a fixed price basis. It doesn't matter if smartphone purchases are going up, going down. And in fact, InterDigital technology today is in literally every single smartphone. So in 2023, there were over 1 billion sold. But also, of course, as I mentioned, all of the older wireless standards. That said, from a business standpoint, only 50% of the smartphones are paying to use InterDigital's patents through license agreements. The other half are using InterDigital's technology without paying.
Can you go into that a little bit more?
So at this point, the vast majority of non-payers are manufacturers that produce and sell devices in the Chinese and to a lesser extent, the African markets. They include companies like Lenovo, Oppo, Vivo, and a smaller company called Transsion. To say it delicately, these markets have historically had a different set of business practices around the use of and payment for intellectual property. Historically, it's been tough to break through those business practices and enforce fair compensation. The good news is that many of these companies are now exporting their devices and selling into global markets. And as such, they are now subjected to globally accepted business practices. By and large, InterDigital does come to agreements with its customers through bilateral negotiations. However, occasionally it is forced to litigate. And the company has a very strong track record in litigation. Recently, InterDigital was awarded an injunction against Lenovo in the German courts. And the courts had some strong words for Lenovo and for their behavior. And InterDigital also received a positive ruling from courts in Germany and India against Oppo. So they are making progress, but it does bring up a very important point about the InterDigital balance sheet. InterDigital has a very strong balance sheet today, has over $1 billion in cash, which is a lot for a $3 billion total market cap company. But it's critical because as a small company negotiating and potentially litigating with much larger companies, we view this cash as sort of an essential competitive requirement. The threat of litigation by a small company is not very concerning if you're Apple and the small company doesn't have the financial ability to back it up. From an investor standpoint, somebody might from the outside look and say, wow, they have all this cash, we can deploy it to give it to shareholders. We actually view a good portion of that cash as necessary for the company to hold. Apple, for example, the second largest company in the world, is a key customer, and interestingly has been since the very first iPhone. But when we look at the value of the patents, as you asked earlier, InterDigital renewed its license agreement with Apple in 2022. 7-year deal valued at just under $1 billion. So that's over $130 million a year at, importantly, a 15% price increase versus the expiring agreement.
And that previous agreement, was it in a similar 7-year context?
Most of these agreements are in long-term contracts. So if you think about Apple shipped probably 225 million smartphones in 22, 60 cents of the cost of every iPhone goes to InterDigital.
Before we get too far away from the patent and litigation point, when you look back in history, were there major litigations that took place that solidified InterDigital, or they won and showed that they are willing to go to bat? Because to your point, the 50% number is a staggering number just in terms of those that are not paying to use the technology.
We've followed and invested in InterDigital for a long time. And a long time ago, InterDigital was viewed negatively in the marketplace by anyone who knew them as more of a patent troll than an innovator. And when we started to look at the company, we realized that it was actually an innovator developing new technologies, securing patents, not just going out to buy other patents that existed. There was a case that drove home, but what's become increasingly more important is that if you look at the competitive landscape, it's typical for an industry standard to have multiple competitors, like 5G. There are more than 130 companies worldwide that hold 5G patents and contribute to the standard. But the top 10, which include Qualcomm, Samsung, and InterDigital, account for more than 3/4 of the 5G patent families. Over time, what's become clear is that InterDigital is not fighting this battle alone.
We can shift back to the revenue point on an agreement with the likes of Apple. You see the 7-year renewal, 15% higher. Comparing that to what has happened to Apple smartphone sales over that same period, it is an increasingly small percentage of their sales. From your perspective, the upfront fixed fee could certainly benefit if we're to see the mobile market decline, but seems like it would have been a net negative in that growth of the market where you had so many more units being sold. I'm just curious, just in terms of the fee, the contract structure, if there's conversation around that ever changing, if you think it is the right model. It does stand out to me where you have this period of time where the market is growing substantially. They might not be able to get a meaningful percentage of that growth.
So I think any negotiated outcome, if it's a good agreement, will reflect the business preferences of the parties in the negotiation. It turns out that for various reasons, device manufacturers tend to prefer fixed pricing models. It gives them a level of certainty. And InterDigital, quite frankly, is a small company. So if they were to have variable agreements, they would then be in a position of auditing sales, auditing unit sales, and doing sort of royalty audits on their customers. What that would do is create sort of an administrative nightmare, and B, sort of an adversarial relationship with their key partners. So they have almost exclusively agreed to fixed price. It's also really much easier for InterDigital to run its business thinking forward. What are we investing for R&D? What are we likely to spend on our patents and potential litigation? And then what is our revenue going to look like? So in many ways is we think, better model than a variable price model would be. But there's a trade-off, right? And there's a risk on both sides. InterDigital is also very secretive about its contracts, obviously for competitive reasons. The Apple contract is public. And if you were to look at a $500 smartphone that has both 3G, 4G, as well as wireless and HEVC, which is the video technology, InterDigital probably earns $1.15 on a fully loaded $500 smartphone. Over the last 20 to 22, they probably renewed 99% of their recurring revenue. They signed 30 new licenses over the last 3 years with a contract value of $2.5 billion. They had this turning point. They really needed to fight to get recognition for their standards. And now they have moved almost to a new phase where their standards and their engineers are not just world-class, but known in the industry to be world-class. An important part of InterDigital today is the management team. And the CEO is a guy by the name of Liren Chin, who came to InterDigital in 2021 from Qualcomm. He, at Qualcomm, was the head of licensing, and he has been a big part of the spark that has helped InterDigital renew existing licenses, advocate for its technology, and sign many new licenses. At the same time, he's also enhanced the shareholder friendliness of the capital allocation. As I mentioned, there was a period where in its history of being a public company where InterDigital was very misunderstood. Liren has an MBA, a law degree, and I think himself has personally 28 or so patents in the US and over 100 worldwide. He really has focused on improving not just the shareholder-friendly aspect of the capital allocation approach, but also communicating better with shareholders and working to make this a company that can be more easily understood.
It's one of those swords that can swing in both directions where management teams, you want them focused on the business, but some ability to tell what is a complicated story is useful. And certainly when that extends into the industry, as you mentioned, having that advocation, being on so many different committees, I think for something like this, it seems incredibly important. One thing I wanted to touch on was his background being head of licensing at Qualcomm. Seems like that backlog number is quite big just in terms of contract value. You mentioned there's some volatility in the revenue stream or in the earnings stream for the business. What drives that with such a high retention rate and visibility theoretically in the contract value?
Revenue today, if you just think about InterDigital, is basically divided 85% smartphones, 15% consumer electronics and IoT and auto. That will change over time. Within the existing space, CE and IoT are growing quickly. It'll probably be like a 75-25 split in the next year or two. But what makes InterDigital tough to analyze from the outside, if you don't really delve down, is this notion of recurring revenue versus one-time payments. Every new license includes an agreement that we will pay you X dollars on a go-forward basis and a recognition that we have been using your technology for some period of time, either before we've signed an agreement or between an expiration of an old agreement and a new agreement, where we agree to a catch-up payment. That catch-up payment essentially carries 100% gross margin, but both the timing, amount, et cetera, are uncertain. Even sophisticated people on Wall Street on the sell side seem to have a hard time modeling because the revenue, you have the recurring nature, and then you get these lumpy 100% gross margin payments. Your revenue starts to look volatile and your profitability looks volatile. So it could raise a question. For example, last year, there was a large payment from Lenovo that won't happen this year. There may be a payment from Samsung still to be determined. But in the first quarter of 23, InterDigital had an operating margin nearly 60% and a net margin of 51%. That will not repeat. It is not a function of InterDigital being a declining growth company or anything like that, but it is a function of how they are paid.
Unique model in that sense. What is the margin profile of the traditional business, putting aside the one-time payments?
The margin profile is actually quite attractive on a recurring revenue basis. From a current base of recurring revenue of about $400 million, we expect in the next year or two, the company has clear line of sight to recurring revenue of around $650. We expect the company to earn a GAAP EBIT margin of more than 40% on that. That includes share-based comp and anything else that might otherwise be left out of an adjusted number. On, in our view, the most punitive look, this is a very, very profitable company.
Has that always been in that range of the 40% EBIT margin? Has there been a massive shift over time?
The way to understand the margin profile of InterDigital is to acknowledge, yes, there is some operating leverage, which I guess is good and bad in any company. We do expect the company to become more profitable as revenue grows, but the ongoing business has a fairly stable margin profile. The exception, if you were to look back, is for a 3-year period from 2018 to 2020, margins were lower, but they were lower because during that period, the company made a basically 2-part acquisition of Technicolor. They bought the patents and then they bought the people, the engineers. And so it was during that period of time prior to the pandemic that InterDigital was really integrating the technology, A, and B, then in the early days of the pandemic, there were some lines of business that Technicolor operated in that were essentially unprofitable, that InterDigital moved out of those lines of business. So people snicker when you talk about non-recurring charges, but in InterDigital's case, this 3-year period when the company appears to have been less profitable and had a less attractive margin profile, it is actually a genuine one-time event. And in fact, laid the groundwork for much of what InterDigital looks to now, which is the video coding and decoding technology.
On the R&D, which I am sure is just a big chunk of the focus and one of the key expense lines, do they manage that as a percentage of revenue? Does it swing massively? Is there some fixed element to it? How do you frame that? Because it seems to be such a key piece of this particular story.
The company invests about $200 million a year into R&D and spends another $80 million a year on licensing and litigation. And that's, as I said, just whatever it costs to keep patents alive, to issue and get credit for new patents. The rest is basically returned to shareholders. It's a capital light business. CapEx is basically less than 1% of revenue.
It's very interesting just in terms of how light the CapEx is. On the return of capital to shareholders, the cash balance that you mentioned of $1 billion being necessary both from a signal standpoint, but also if it needs to be put to use. Does that number stay capped at $1 billion where in theory, as they generate more cash, less has to be swept across to stay on the balance sheet and more can be distributed to shareholders?
That's certainly a possibility. Over the last probably 10 years, the company has reduced shares outstanding by like 50% and shows no sign of slowing down. The company pays a dividend. It's not huge. It's like a 1.5% dividend yield. But I look at the one-time payments as upside to the profitability of the business. Timing and amounts uncertain, but upside. I'm happy to have uncertainty as long as I know it's good.
Free call option in some way.
We have not even really begun to talk about the true free call at InterDigital, which is streaming and video. Streaming and cloud is considered another $500 billion market that I would say is fully greenfield. Almost no one is paying for it. Yet 6G will not come to fruition for probably another 8 to 10 years. Video compression and decompression was created years ago. Almost every streaming company out there, Netflix, Amazon, you name it, are using standard video compression technology. That's what makes it possible for you to have these downloads that are fast and viewing experiences that are not glitchy or lagged. InterDigital is a contributor to this standard. It has patents, yet almost all of the streaming companies are using the technology without paying for it. I mentioned sometimes it's nice to have strong friends. Technology innovators are working hard to get paid fully. For example, last year, Nokia sued Amazon for Prime Video use. Broadcom sued Netflix and have received positive rulings that there is infringement. While they're not being paid today, it's inconceivable that they will not eventually be paid. Looking forward, there's this market size of $500 billion with the potential for significant one-time payments. And if InterDigital has any kind of similar penetration, you could imagine essentially almost a doubling of the recurring revenue. Not tomorrow. These things take time, but it's interesting to see a company that has highly profitable existing business, the potential for free upside, and then this whole free call. But what's interesting about the free call is you're not waiting for proof of concept. This technology is used by everybody today. It is simply a matter of getting paid for it.
Enforcement. You mentioned before that the change in management has resulted in some better communication with investors. I'm wondering if they communicate around this topic at all, how they go about enforcing that patent usage, whether it's a wait for some of these large peers to have success in court and use that as precedent, whether they're already on the aggressive attack and trying to negotiate privately. Is there any sense that they are making progress there, or anything that you think you can track to have some line of sight into when that may actually happen?
When I look at what the management team is focusing on now, the low-hanging fruit is getting paid by the 50% of the smartphone market not using. And the further out fruit, at least right now, you're seeing the Nokias and Broadcoms of the world starting to fight those battles, is getting paid for the standards that exist for the high definition video upload download. And then from an engineering standpoint, the engineers are looking to 6G. Because if you think about it, the video has already been created, that technology.
The duration of these patents, it sounds like there's usage of this technology. Do they expire where it's a risk of major cliffs of revenue drop off at certain periods of time?
That's a great question. Patents are protected in the Constitution, but they are protected for a limited period of time. So all patents expire after 20 years. But unlike a pharma company that might have a patent cliff because of a specific drug on which a massive amount of its revenues may depend, InterDigital is always innovating. As I mentioned, they receive new patents on a daily basis. They have already been working and have patents on 6G, which likely will not come to fruition for 5 or even 10 years. So yes, patents expire. They renew whenever is needed. And when they expire, usually it's just so old at that point that the technology would remain, let's say in a 2G phone, but there's essentially nobody selling 2G phones. So they're not really losing anything because they've gained the next, from 2G to 3G, 3G to 4G to 5G, and then eventually to 6G. So unlike a more typical kind of patent business, like a pharma company, no, there is no patent cliff. And when you think about, well, what does a small company like InterDigital have that could attract great engineers when the competitors are Qualcomm and Broadcom and Nokia? The reality is the CEO of Qualcomm cares, but doesn't really look carefully at the licensing business. It's a very profitable segment, but a tiny fraction of the revenue of Qualcomm. So when somebody like a Liren leaves Qualcomm to go to InterDigital, he does that so that he can move from a tiny business division in a large company to being the whole enchilada. So this is a firm that engineers want to come to because engineers at InterDigital are the rock stars. They're the ones who get their research funded. They get to be surrounded by the best of the best. So there's a virtuous cycle to that, but also a benefit to being a very focused research business for people who want to be surrounded by other researchers and other engineers.
I'm going to almost record scratch some of the positives that have been talked around this business, that point being one of them, the independence and how that can be beneficiary with conflict of interest. I'm curious because most of these divisions exist within broader companies. Has InterDigital ever been looked at as an acquisition target for the likes of an Apple or someone else? A record scratch in the sense that would certainly take away some of those positives that I just referenced, but it does seem like a really interesting asset to own.
In 2012, there was a lot of talk about InterDigital maybe being an acquisition target. Ultimately, they sold 1,700 patents to Intel for just under $400 million, which is interesting because that says something about the value of these patents. That was a long time ago and no longer is a focus of the company. Being acquired, I just think it's unlikely. I think there are a lot of companies that would like to buy it, but it is an unlikely acquisition for all the reasons that we discussed. There's this tremendous benefit to being independent. This notion of if you were to be acquired, would you then lose many of your engineers? Your greatest assets walk out the door every day and have chosen to come to a small company like InterDigital for the benefits that a small company with stock options and everything else provide. So I don't think it's likely. I think it's far more likely that the share count shrinks, that the capital return to shareholders becomes difficult to ignore, and the company grows into a market cap more like what it deserves.
On the valuation framework for a business like this, you mentioned it's capital light, unique capital structure, a lot of cash on that balance sheet. There's a lot of reasons why between the earnings stream and the one-off payments and some of those dynamics you mentioned would put a quant model through some type of hell. But from a fundamental standpoint, how do you look at this business valuation-wise and just think what the right framework would be to use for something like this?
We look at it on really what is the recurring revenue at the standard profitability of recurring revenue worth. If you put a 20 multiple on something like that, it's capital light, pretty attractive. As I said, you get a market cap of around $4 billion, which is 30% higher than today. If you look at something like a Dolby, which is basically the same licensing business model, they develop the standards, they develop the technology, and they license it. Dolby, albeit, has a brand. InterDigital, nobody has heard of.
They got to get their stickers and their logos on laptops and cars.
Exactly. But over the last 5 years, I think Dolby has had an average multiple of 23, 14 times EV to EBITDA. So you could apply any one of these metrics and say that InterDigital is 50 to 75% undervalued, not giving credit at all for potential additional one-time payments and not giving credit at all for the greenfield opportunity in video and cloud. We sort of think of those as additional upside that you're not paying for, and then the cloud is free call. The proof is in the pudding, in the fact that the technologies are being used, but they are yet to be compensated.
What do you view as the risks beyond the cyclicality? What are major threats here?
Interestingly, because of the fixed rate nature of the contracts, there's less cyclicality than you would imagine. In our mind, the risk is really if there were to be a massive global regime change and focus on the value of patents and the notion of patent protection and fair compensation for patent holders. Every now and again, you hear people talking about that, whether it's pharmaceutical companies or what. The reality is that patents protect innovators, and there would be significant global innovation risk should that come to pass. When we think about the risk for InterDigital, that's really the risk.
And to tease that out, the patent questions in pharmaceuticals, a lot of it seemed to stem from those that were overexerting power on price with the patent portfolio that they had. In this case, it feels like that's certainly not happening, where there's a need to collect and enforce more than anything. Is that fair, or is there anything missing from that?
No, I think that's absolutely fair. There's nothing onerous or usury in the way that they charge.
On the mobile phone, I don't think we're seeing anything change with mobile phone usage in the future, but it's becoming almost a smaller line item for some of these businesses, and you're seeing some drop off, whether it's chip purchases, different things. Is there anything there related to that business that's a fear, thinking about maybe really far ahead, 7 years from now, maybe as that next Apple contract comes up? How much focus do you put on the strength of the mobile market as everyone is looking to develop new devices to take over that next regime shift?
The technology for devices to communicate I don't think is going anywhere. If it's not a smartphone, if it's a headset, or if it's an iPad, or if it's a watch, they all rely on the technology. So I doubt that. Does the cost of using these patents or the next generation of them go down for Apple? No. Does maybe become a smaller part of Apple's total budget? Maybe. Warren Buffett was talking about Apple, and he said most people who have 2 cars and a phone, an iPhone, would choose to get rid of their second car before they would choose to get rid of their iPhone. So this notion that we're going backwards, tying it back to Seligson's concept, he wanted dial tone anywhere, anytime. And we are now a society that demands that. And companies like InterDigital make it possible.
It's been an excellent conversation. To close things out here, we talk about lessons that you can take away from this business and apply elsewhere. Are there lessons that you would point to?
What I think is sort of a key takeaway for a company like this, at Summit Street, we basically are focusing on U.S. public equities of generally global companies, and we want to compound our partners' capital safely. We want to do that by buying common stocks of what we think are uncommonly good companies. InterDigital, in our view, is a great example of that, but only when we can buy them at bargain prices. The reality is that you don't often find a great company at a bargain price unless there's a good reason. Increasingly, there are structural issues in the market why the price of a good company can move away from intrinsic value, particularly small companies that are left out of the large indices, and a company that's a little hard to analyze by the sell side or on a superficial level. As an investor, this is exactly the kind of company we look for. InterDigital is sort of afflicted by both size and complexity. But if you are willing to sharpen the pencil as an investor, to me, that's where you can find the sort of opportunities that we're looking for.
Thank you so much, Jenny. It's been a masterclass learning about this business. Appreciate you coming on and sharing the knowledge with us.
Thank you. It's been a pleasure to chat with you.
To find more episodes of breakdowns ranging from Costco to Visa to Moderna, or to sign up for our weekly summary, check out joincolossus.com. That's JOINCOLOSSUS.com.
A quick note before you go. If you are a company hiring or a candidate looking for your next opportunity, make sure to check out joincolossus.com/recruiting. We launched our recruiting efforts at the end of last year. We started working with firms that were interested in tapping into our audience. And after seeing some early success, we want to open this up to additional firms and to candidates who are proactively looking for their next opportunity. So we are mostly revolving around the investment world and the tech industry. But again, make sure to check out joincolossus.com/recruiting for more information.